Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. Now, GDP data for quarter four came in line with expectations at 2.6%. But a lot of people out there, including us, thought it was going to come in much softer than that and much closer to 2%. So you're seeing really the risk assets or safe havens really start to kind of price that in. Treasuries are getting hit. Gold is taking a bit of a bath. Gold, remember, from yesterday's low, it stabilized back up and was testing resistance at 1330 early this morning. But it is now making a new swing low, and it's pounding against that trend line from November. Watch that trend line as we go into the close. The S&P, though, the equity markets, they're sort of just gyrating back and forth. The better than expected number was really just right in line with that is expectations and sort of a Goldilocks number. Chicago PMI came in much better than expected. You know, the overall growth, manufacturing as well, may not be as bad as what people thought. And this could get the Fed or start to get the Fed a little back, move back across that hawkish dovish line into hawkish territory. Now, Fed Chair Powell does speak tonight at dinner, 8:15 Central Time. We have a slew of Fed speak today throughout the afternoon. Philadelphia Fed President, Dallas Fed President, and Cleveland Fed President later tonight. So stay nimble as things develop. But overall, the inline number for GDP, the better than expected Chicago PMI, start to negate some of the poorer data we had, such as retail sales. And again, the market isn't capitalizing off of it. You know, you're seeing the S&P not heavy, but continue to consolidate near the higher end of last week's range. And then, you know, what we're also looking to today is some of the comments that we had coming out of the White House. Kudlow, very upbeat on the trade talks with China. Mnuchin as well. Everybody in the White House is working together, you know, is really what they're exuding. But it's a bit of a contrast to what we heard yesterday from Lighthizer. And that could be keeping a little bit of a heavy foot on the equity markets and not allowing them to have a bit of a relief rally after such a sort of Goldilocks number on the GDP side. Keep an eye on some of that, but that jawboning from the White House is sort of getting the laws of diminishing returns. We need to see some substance. And really, I think what people are really taking out of that is taking to heart what Lighthizer said yesterday in those congressional testimonies. So stay nimble out there. Crude oil, lastly, is holding up very well. Tethered to about $57, facing those highs from last week, but yesterday's number, very supportive to the market, sort of shaking off that production as of right now with those imports dropping and the onset of a seasonally bullish time of year. Right now, as long as crude oil holds above 56.5, it's a medium-term bullish, but it has to get out above last week's high. It has to continue to prove its momentum. So stay nimble with that, but right now, the bulls are in the driver's seat. Give us a call. We're here to help talk about anything on the board, 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates, and you can sign up for a free trial or research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot. Bye.